Hello, my name is Steve Bigelow with the Candlestick Forum. We're starting to see a lot of weakness in this market. You can see how the Dow last week broke out of the wedge to the downside. Notice kind of your bearish harami, and then a gap down through the T line started the selling. This is where it becomes very obvious which way the market trend is going, especially when you look at the other indexes like the NASDAQ. Well, for crying out loud, the NASDAQ was starting to roll over when the Dow was selling off and stochastics heading down. Then on Friday, it broke. But this was good evidence that there was your kind of your evening star signal. There was your gap up doji. This is always the little intricacies that you can utilize in candlestick analysis. What the Japanese rice traders always profess, where do most people buy? They buy exuberantly at the top. How can you tell that? They start gapping up in the overbought area. Look at the gap up doji, spinning top, evening star signal, now a bearish engulfing signal. This is pretty strong evidence the bears have taken control when you have all the indexes starting to sell off at the same time and closing below the T line. So you want to short the sector, or short the casinos, and you want to buy Biotechs. You can see on Wynn Resorts how it's done a bearish left-right combo right here at the 50. Stochastics heading down. Good likelihood they could be coming back down to test this level. Number one, fill in the gap. Number two, fill in the gap. And then possibly even going lower. When they are in a downtrend or a price is in a downtrend and it comes up, what do we look for? The obvious resistance level, in this case, the 50-day moving average. Same scenario over here on Las Vegas Sands. You can see how they failed at the 50, did a bearish harami at the 50. And remember, a bearish harami tells you the buying has stopped, followed by a doji sandwich, which is taking you back below the T line. Once again, these are your targets, stochastics heading down. These are good opportunities to be buying or shorting the stocks or buying the puts. The biotechs are still acting strong. There's a lot of J-hook patterns, as we can see in DCPH, a J-hook pattern right smack dab off the T line back up through the 50. Wave one, wave two, look for wave three to be the same magnitude as wave one. So when you start seeing a bunch of these in the same sector, there's your bullish left-right combo J-hook pattern. Very simple entry strategy with candlestick analysis. The doji tells us the price will usually move in the direction of how they open it after a doji. So if they open this positive, the probabilities are they're going to trade positive, which means they're breaking out through this level, putting you into wave three of a J-hook pattern. Again, this is all just common sense analysis from what the Japanese rice traders have illustrated to us for hundreds of years of what normally happens in investor sentiment. So the bullish J-hook patterns are working. The bearish J-hook patterns, like in Dollar Tree. Look at the bearish engulfing signal, failure at the T line. Wave one, wave two, they break this level. Good prospect of wave three taking you much lower. So we're going to be doing a training session this coming Saturday, September 18th. Going the opposite direction. Most investment advisors will show you how to find good trades to buy. They don't spend a lot of time on when to sell or when to go short. We're going to be working on that. We're going to be identifying situations where it's time to go or time to take profits, or when it's time to go short. So with that, we're still looking for these markets to head down a lot further based upon the bearish moves in the indexes. That'll be it. We'll see you in the chat rooms. Come join us next weekend for a very full day training on what signals and patterns illustrate when the bears are starting to take control.